With banks closed and the economy in freefall, Greece has never been more close to a state of bankruptcy. Down the line to share his insights with us again is Nick Stamenkovic. Nick, Greece's jobless rate fell to 25.6% in April. The economy contracted by 0.2% in the first quarter, dipping back into recession after a fragile recovery last year. Now, the news flow so far has been that Greeks are not up in arms about the capital controls, etc. But this is surely a sharp reminder of the human cost of Greece's debt crisis.
Absolutely. I mean, Greece has gone through terrible turmoil over the last 4 or 5 years. For peak to trough, GDP fell 25%. As you mentioned, the unemployment rate is very high, particularly amongst the youth, and that they were a key factor behind the no vote last Sunday. The lack of liquidity of the banks is a compounded situation, and if it continues, then it may force companies or the banks are used to be introduced to pay pensions, salaries, etc. For now, the ECB is providing a lifeline, but if they don't get their payment back of $3.5 billion on July 20th, then they could well pull the plug, and then Greece will be in all sorts of trouble. So essentially, the recession is deepening by the day, unemployment remains elevated, and Greece is clearly at a crossroads.
Another day, another deadline. Greece has until midnight Thursday to submit proposals. But the goalposts have significantly moved. Varoufakis has gone. Banks have been shut for a fortnight. This is going to be a lot more painful for Greece than if it'd been sorted out at the end of June, for example. So what can Greece expect?
Well, I don't think Greece is in a very strong position. Clearly, trust between the two sides has broken down. We've seen that in the last week or two. Greece has formally put forward a recommend to call for a 3-year European Stability Mechanism bailout, but it's got to put its own proposals on the table. And until those proposals are on the table, it's going to be difficult to see the European authorities bending over backwards to help them. And remember, they came to the last meeting with no measures at all. So, there are significant strains between the two sides. But there does seem to be a little bit of hope that maybe the deadline on Sunday will finally prompt an agreement between the two sides.
Supposing proposals are submitted and accepted, Merkel made clear earlier that she was not exaggeratedly optimistic that a deal could be found to save Greece by Sunday. If that's the case, what happens then?
Well, I mean, essentially, if there's no agreement, and the talks break up this weekend, and the two sides, don't speak to each other, then clearly Greece will not be in a situation to pay the July 20th payment to the ECB. That means essentially the ECB, as been hinted by Bundesbank President Mr. Weidmann today, would pull the rug from under those banks. That means the banks, for all intents and purposes, would be completely out of liquidity, and hence, if the Greek government wants to pay its workers, wants to pay pensions, then they'd have to issue IOUs. And that would probably mean issuing in a parallel currency, at least initially. And eventually, if we continue to go down that road, they probably have to move to their own currency. But that will be a gradual process. And if that occurred, then clearly the drachma will be at a much lower level than the euro. It would fall very sharp in the markets when it initially comes, and Greece will go through an awful lot of pain. This just highlights the fact that there's no easy way out for Greece. Either it succumbs to the European authorities and agrees to deal with strings attached and agree to conditions, including structural reform, or the two sides break off, and Greece eventually is forced to issue its own currency, which will be very painful and would prevent them from entering the capital markets a considerable period of time. So we really do seem to be at crossroads here. Time will tell whether an agreement is reached, but if not, then the situation in Greece is going to get worse.
So euro-dollar is hanging around the 110 mark today, better than 2 days ago admittedly. But what sort of levels are you keeping an eye out for in either situation?
Well, the lows are about 109.15, I think it was. So if we go through that, we could test lower, maybe 108, even the lows of 105, the lows of the year. On the upside, I think we've hit 114. If we get through that, then maybe 115, 116. But essentially, we're stuck in a narrow range. I mean, the market's pivoted around the Greek news. But ultimately, I think once the Greece situation dies down, the focus will shift very much to what the Fed is doing. And if the Fed starts to raise rates in September, then market investors will recognise the divergence of policies between the Fed and the ECB, and hence I think the euro will be on the back foot. But for now, it looks like it's being pretty range-bound. But over the medium term, I'm still a euro bear.
Nick, thank you. Well, that's all from Nick and myself for the moment, but make sure you keep clicking back to Ricoscopy TV for more exclusive interviews. Goodbye for now.